Bloomberg Quint.
Welcome back. You're watching IndianOpen right here on Bloomberg Quint Live. We've got a full trading week now after yesterday's truncated week, which ended in the red. So today's session, though, the rest of Asia looks fine. You've got the Nikkei 225 up about 0.5%, Shanghai, Hang Seng. So driven by global cues, and if nothing turbulent happens to our own Indian announcements that come in, and news flow that we're seeing, we could probably see a decent start, but hopefully let's watch out for the close. That's more important. Yeah,
maybe two things, right, Devina, as we were talking about last week. One, we follow the global trends, and two, if there is any kind of stimulus announcement that comes in, because I think everybody's batting for that right now.
Actually, everyone was watching out for it over the weekend. Nothing really came out with
maybe
that.
This week.
Yeah, hopefully, let's see. But aside from that, a lot of other major cues to watch out for, particularly coming in from the futures and options space. How's the setup looking like? Navneet is joining in with that. Navneet, good morning.
Good morning to both of you. Well, looking at the futures and options market, we definitely had a recovery coming in on Friday. But remember, it was a truncated week. Plus, for the week, Nifty was down about 0.5%. So there was some sort of build-up which came in on the futures side. And most importantly, the futures closed at a premium versus discount to the previous trading session. So there were some fresh positions being taken on Nifty futures. And similarly for Bank Nifty, where open interest was just up about 1%. That too moved into premium versus discount that had seen in the previous trading session. And looking at the options data for the day, for this week's expiry, maximum open interest on the call side is at 11,100 call and the 10,900 put. So that's the range probably you can watch out. And most importantly, last week, we defended the 10,900 mark, and also we defended the recent low of 10,783. So these are the two support levels on the downside one can watch out. But there was more of put writing which took place on Friday at the 11,000 put. Also the 10,900 put strike saw open interest addition. And on the call side, you did see some bit of addition coming in at that 11,100 strike. In terms of stock futures, you can watch out for stocks like Apollo Hospitals, which has been witnessing fresh long positions post its numbers for the second straight day. Shorting continues for Glenmark, and PVR has been trading weak off late, so short positions seen there as well. And one of the Nifty constituents, UPL, which was up and about on Friday, saw a bit of short covering coming about. And the FI data, though the markets recovered, they sold in the cash segment. And even on the futures side, you did see fresh shorting coming about on the index futures. Almost 6,448 contracts were added there. And on the index options, addition was seen across the board, but there was a mild bias seen on the positive side because more positions were being added on the call long as well as the put short side. With that, it's back to you guys.
All right, Navneet, thanks very much for that. Avinash, Gorakshakar, Head of Research at Joindre Capital Services, he's joining us right now. Avinash, a very good morning to you. The big monitorable is going to be both Ujjivan and Equitas. So Ujjivan, for one, they filed the DRHP. But whether or not this is conclusive, and if at all there is something else that comes in from the RBI with regards to the incorporation and the licensing aspect, which they're going to be deciding by the end of August, then may see some changes there. But what would you do keeping in mind today's trade?
No, I think clearly, this event was awaited from a very long time, and I think clearly. Hopefully, I think, this IPO news flow definitely should be positive because it actually clears a lot of uncertainty. In terms of valuation, I think clearly the markets are giving some sort of a holding company discount to the small finance bank. I would believe that, it's better to wait for the dust to settle down because none of the small finance banks have actually made a significant mark in terms of profitability. So I would believe that, Devina, rather than looking at these, banking stocks, it's better to focus on the front line, large cap, either retail or corporate focused banks. I would believe that we may not see a very big upside or downside on the stock, and until some more clarity comes, it's better to remain a little aloof.
Avinash, strange you say that. There will be a holdco discount that will come in for the listed stock right now. So Ujjivan Financial, as we know, in all probability start off lower.
It should. I think this news partly has been, discounted in the markets, but probably, if this materializes, then you could see the, difference, the discount which you are seeing. It would possibly, widen further.
Actually, the stock went and nudged almost 200 in October last, when the first time the RBI, when the conversations happened that these small finance banks have to go ahead and list. And at that time, there were talks of a reverse merger and some other route, because IPO is not the most
in Ujjivan's case, a shareholder rewarding route.
So
yes.
it's not the most prudent route, but I guess now with timelines being so close, you really need to speed things up, and probably that's the route they've chosen.
Yeah, I mean, I was just looking at the notes, and as we discussed in the first word piece as well, I mean, the holdco discount, depending on what discount you give, if it's a 50% discount, then the price for the holdco reaches actually lesser than that, maybe 250 or thereabouts. And remember, I mean, stocks like Grasim, etc., not an apple-to-apple comparison, but they traded a significantly higher discount as a holdco as well. So what if the market were to price that in? You don't fear that, Avinash?
Well, I think going forward, obviously, the holding company discount would be a big overhang on the stock. And I think clearly, as Devina said, the choice for these companies is very limited, considering that the deadline is now very near. So I think, yes, I mean, to a large extent, it's better to not invest fresh into these, companies like Ujjivan or Equitas, because clearly, I think once the holding company discounts comes into fact, then I think, obviously a lot of re-rating which had happened earlier is now going to get, retreated.
I'm surprised we've not heard anything from Equitas yet, because their listing has to happen
15 days on thereabouts,
on September 4th. I think that they have appealed to the RBI to extend the deadline, but whether or not they've got any response to that, because they've really not done anything on that count yet.
Yeah, they haven't.
But other than that, just the fact that, over the weekend, a lot of industry stalwarts coming out and saying that the economic growth needs to be spurred, the government needs to do something to make sure that growth comes back on ground. You had the management at M&M talking about something for the auto industry, the SBI chairman talking about revival of the economy and something that needs to come about. What would you do now with regards to a few of these sectors and the stocks there within?
I think, Devina, clearly, the fiscal stimulus is something which I think a lot of markets, participants are expecting from a long time, and hopefully we could see some news flow happening in the coming week. But I think clearly in terms of the demand scenario, I think sectors like automobiles, auto components, FMCG, I think we have seen a clear slowdown, and I would not be surprised that Q2 could possibly be as bad as the Q1. And I think any hope of a revival, in the industry headwinds could obviously happen if this package is announced at the earliest. I would not be surprised that, you could see a lot of lackluster activity, considering that this is a festive quarter. I mean, on ground activity clearly suggests that despite being a festive quarter, I think the consumer sentiment has been hit badly. So I think it's, it's going to be a tough call for at least sectors like automobiles and fast moving consumer goods. Clearly, I think demand is, gone down to, extremely low levels. And I think Maruti and Mahindra have been talking of deferring investments, cutting down, blue collared workforce. So it's going to be a terrible quarter as far as Q2 is concerned.
Yep. The other thing is, of course, the kind of earnings cuts that we've seen off late. And I think most brokerages have come out with their notes saying that they would go out and cut the estimates. So CLSA, for one example, says that the weak economy has triggered the broad-based earnings cuts, and the Nifty earnings for FY20 and 21 have been cut by 5%. The consensus has been about 3 to 4 odd %. So CLSA has gone out and given a wider cut to the Nifty earnings for FY2021, and they believe that the earnings growth for FY20 is slated in their assessment at about 18% versus the consensus expectations of 21%. And what if these numbers were to go down further is the question that I asked. So you've got to keep that in mind. The few pockets of strength according to CLSA's expectations that have stood are cement, IT and pharma, and non-lending financials, and good results from ICICI Bank, which also stand out for them. So a few pockets of strength, but otherwise earnings downgrades largely. Avinash, we just did a small piece about 10 minutes back on 10 companies which have done very well this earnings season and did very well in FY19 as well.
Yeah.
Pharma companies tended to stand out. There was Torrent, there was Biocon, and there was AstraZeneca. Fundamentally, do you look at any of these three names? They've done well in Q1 and they did very well in FY19.
No, I think clearly Biocon should do well. Our sense is that despite the fact that there have been some regulatory kind of hurdles for some new product molecules, I would believe that, in the biosimilar space, we have seen obviously some earnings traction coming in Q1, and hopefully FY20 should be a much stronger year as compared to last year. And I think some of the companies which I heard on your show was Vinati Organics. I think clearly, this is one stock which has actually outperformed the market significantly. And I think despite the fact that valuations are not cheap, we could see a lot of earnings growth and a lot of volume growth kicking in. So I think, any decline in these companies, Neeraj, could definitely be a good opportunity.
All right, lots more to talk about with you, Avinash. Just stay on with us. But in the meantime, let's go across to our research team. They're joining in right now to talk about some more stocks and news and what kind of reaction they could have. What is CLSA's call on Maruti? And I think they've cut the target price, but Yatin joins in for that. Mishika, let's start off with you first.
Yes. So Coffee Day Enterprises says that the company's debt, the group's debt stands at 4,970 crore rupees and that the debt of the group will reduce by 2,400 crores post the Global Village Tech Park deal. The company is expected to have a comfortable position to service the reduced debt obligations. Sun Pharma enters into a licensed agreement with China Medical System to commercialize 7 generic products in China. Then we have Jammu and Kashmir Bank. Anti-Corruption Bureau registered a fresh case in the loan fraud worth 350 crore rupees. Diwan Housing Finance says it's not in a position to release quarterly results in time due to engagement of accounts and finance teams in various non-routine audits. Lastly, we have Pradhan Infra. Its arm has secured orders worth 145 crore rupees for various works at the Hyderabad International Airport.
All right, Mishika, thanks very much for that. Yatin, Maruti struggling as of now. What has CLSA got to say?
During the quarterly earnings also, CLSA had cut their estimates, and today again they came out with the report. They've again cut the target price. So now the target price stands at 7,200 rupees versus the previous target price of 7,400. However, the rating is unchanged at buy. They have cut the FY20 and 21 EPS by 8 to 10% respectively. This is largely on account to do with the fact that the volume expectations in terms of the previous estimates are lower now. Of course, we have seen that most of the auto companies struggle now to sell, the dealer inventory also in the marketplace. Of course, CLSA also says that the demand environment is weak, but passenger vehicle is better placed for a recovery, if any. And more importantly, the demand recovery should help Maruti lift margins, as well as the commodities which are looking soft now would be a tailwind to their overall margins. Of course, Maruti, since the rating is buy, CLSA believes that it's the best way to play the Indian auto recovery. There were hopes on the weekend, for a stimulus package, some kind of a GST cut on auto, some kind of package. That really didn't happen. So let's see how the auto packs reacts in trade today.
All right, guys, thanks very much for that. Avinash, a quick word on Maruti. I mean, the stock is struggling. It's hovering around that 5,700, 5,500 mark for some time now. CLSA has gradually started downgrading its price targets. But what do you see as a fair value for Maruti?
No, I think clearly, Maruti should definitely, continue to underperform, considering that on-ground activity clearly is suggestive that apart from production cuts, July has been an extremely bad month. I would not be surprised that possibly Q2 could be as bad as Q1, and I think unless and until the government announces some fiscal stimulus, some sort of relief, because most of the auto majors have actually decided to cut down production and reduce inventory in the system. So I think as of now, I would not prefer to go out and buy Maruti. I think it's better to wait for Q2 numbers to come out, look at the management commentary, and then see how the headwinds emerge. FY20 is going to be definitely clearly a very challenging year as compared to last year.
Avinash, we talk about moats that companies have. We talk about regulated businesses and how difficult it is to get into them. Some of these have also seen a pullback. So there's a query that has come in, which is very interesting, I thought. Indian Energy Exchange, CDSL, companies that are listed, did well. The businesses looked very solid, probably still look solid, but the prices have come off. Is there merit in trying to own this, or because there are a lot of other stocks that have come down, cast your net wider, don't necessarily look at these companies? What's your opinion?
No, I think, Neeraj, obviously, both the companies you mentioned have got very strong moats. I think CDSL is a very interesting stock, considering the fact that, it doesn't have a very heavy asset kind of model. It's an asset-light model, a cash-rich corporate. And I think if you want to bet on the Indian capital market, I think this is one place where possibly you would definitely make money. But I think over the longer term, I think investors who have entered the markets about 1 or 2 years back have actually, been misled that equities actually deliver very strong returns in an extremely short time. So I think longer term, these are businesses which would definitely generate a lot of value. I think some of the stocks like Mahanagar Gas or typically and even an IGL, I think these are companies which I believe have got extremely strong moat despite the fact that some challenging headwinds are emerging in terms of fresh competition. So I think investors should actually position themselves for a longer time frame. I think money can be made, but in the short term it's extremely difficult to pinpoint what could be the returns be like.
All right, let's bring in our technical experts as well. Brijesh, Bhatia, head of research at Dealmoney Securities, is joining us on the show this morning. Along with him is Ruchit, Jain, technical analyst at Angel Broking. Good morning to both of you. Brijesh, I'll start off with you first. Holding on to 11,000, what's the way forward?
Morning, Devina. I think, it was crucial last week, though it was a truncated week. So we have seen a good swing between 10,900, 11,050, 11,070 on the upside. So it was majorly a inside bar week last week. And I think 11,100 might act as a minor resistance level on Nifty. Even if you look at the derivative structure, we have seen in 11,100 calls been aggressively returned to the tune of around 5.5 lakhs on the last Friday session. So it might, and if you look at the last couple of days high, it was around 11,070, 11,075, both the same, nearly same highs. So I would slightly wait for a Nifty to cross 11,100 to take a now fresh long bet on the Nifty, and expecting around 11,085 on the futures on the upside once 11,100 is breached on the upside, and one can keep a stop loss of 11,055, 11,059 on the downside on the futures level, and bet for 11,185 on the upside.
Okay. Ruchit, what about you?
Yeah, hi, very good morning to everyone. Well, in last few days, we have seen that markets have traded in the broad range of 10,900 to 11,150, 180 on the high side. Now, one observation that we have seen that post-budget, when this market has corrected, on every pullback moves, Nifty has resisted around its 20 days exponential moving average, and still the index has not crossed its 20 DEMA. So until we see a breakout above the same, which is also the recent swing high of 11,150, 120, the short-term trend would continue to remain down. And I think only if we get a breakout above 11,180 or a breakdown below 10,900, which is the support seen during last week, then only we should get a directional move in the index. So as of now, we are not advising to take any trade on the index, but two pivot levels that traders should keep in mind: 10,900 on the lower side. If 10,900 is breached, then one can assume that the markets have resumed its short-term downtrend, and then one can take a short position, or one should wait for a breakout above 11,180, which is the swing high, to take any fresh long positions.
Okay, so in light of this index view, what are the stocks that you guys are recommending? Brijesh, if I can start off with you first. Your technical recommendations for the morning include, of course, aside of the Nifty and the Bank Nifty where you are bullish, a buy on Bandhan Bank and a buy on DLF.
So I will let's start with the Bank Nifty. So if you look at the Friday session, Bank Nifty has seen a strong comeback and ending above 28,000 mark. So I think a good short covering rally in the Bank Nifty, again filling up with the ICICI and Axis, both gaining strong momentum from lower levels. So I think a good bet at around 28,270 was the close in the future. One can go long at the opening, keeping a target of 28,500 for a momentum play. Stop loss would be around 28,154. On the stock side, if you look at the Bandhan Bank, was resisting around 500 marks for quite some time, and after a long time we have seen a weekly close above 500 mark, and on the daily chart it has breached the previous couple of resistance, but around 501 it made a high, and closing above 502 is a good sign of bullish momentum. Plus, if I look at the MACD, it has given a positive crossover, so ending a short-term bearish momentum, giving a bullish sign. So one can go long at around 502, keeping a target of 524 to 540 on the upside, and stop loss can be placed at 492. Second bit is on DLF. DLF, if you look at the momentum, it's quite strongly struggling to breach 170 mark on the downside, and every time we have seen 170, 172, a strong comeback towards the 175 levels, and a weekly close at around 177 is giving a good sign. Plus, if I just look at the RSI, it has given a bullish range shift in daily charts. RSI chart is forming a higher bottom. So at 177, one can go long for the target of 185 to 190. Stop loss can be placed at 117 on the momentum, and if one want to play at around 200 targets, stop loss can be around 168.
Okay, Ruchit. So well, Brijesh has an all buy list. Your strategies include, aside of Nifty again, a buy on IndusInd Bank and a buy on Trent. I think it did very well in Friday's trade.
Yes, Neeraj. So, no, IndusInd Bank is buy primarily because if we see last 3 months, the stock has managed to find a good support around 1350 mark on 16th of May, on 20th of June, and on 30th of July. In these 3 months, the prices have come near 1350, but has not breached those levels comfortably. So, I think because of this, the good support around 1350, we should see a pullback move. Even in Friday's trading session, we had seen an up move of about 2.5 to 3% in the stock. So we are expecting a pullback move towards 1500, which is the resistance. This would not be a resumption of its any kind of uptrend, but just a pullback move. So one can look to go long in the range of 1420 to 1425 if we get minor dips today, with a stop loss below 1375 for target around 1500. And my second pick is Trend Limited. This is basically on the principle of outperformance. Very few stocks in this market are trading at the 52-week highs, and the kind of outperformance in spite of the mid-cap space showing such a tremendous, such a down move in last few months, but still this stock is now at its 52-week high, and in last few days the up move has also been supported by increasing volume, so which is a positive sign. So we expect this outperformance to continue because of the volumes which are high on up move. So one can go long on Trend Limited with the stop loss below 439, expecting target around 500 to 510 in short term.
Okay. Got that. Gentlemen, stay on with us. On to our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So we're looking at HUL, and there's a sell signal coming in on the counter. We've seen some amount of weakness come in, but the stochastics indicator is what we're using, and that one has indicated an early sell signal on the counter. Now, as you know, the stochastics is a trend following momentum oscillator. It basically helps identify when a price move is overextended by measuring the current price relative to its highest highs and lowest low. How do you interpret it? Overbought is above the mark of 80 and oversold is below the mark of 20. Any crossover that indicates a buy or a sell signal. Now coming back to the price chart of HUL, and this is on the daily time frame that we're using the stochastics indicator. In the lower panel, as you could see, the blue line has given a negative crossover, so it's crossed below the white line of the stochastics, and that has happened above the mark of 80, which is the red line. So this is an early sell signal which the indicator has thrown up when it comes to HUL, but that is as far as the price action is on the daily time frame. Now it's crucial to look at the weekly chart as well, and we've seen interesting trends over there. So this is the 5-year weekly chart, and the red line over here, that is the mark of resistance. This is the third time that the stock has come to the mark of almost 1864, and it has given up on this gains. The last week, although it was truncated, as we know it did not manage to move higher, and it was largely range bound. So we have seen higher upper shadows as well as lower shadows, and the real body being very small for the stock in the last week, and it is poised at the mark of 1864, where it has come thrice. The RSI too has given a negative divergence. So despite hitting that higher price mark, the RSI has been making lower highs on the weekly time frame, which is another indication that at higher prices or at higher levels there is a significant amount of weakness coming in, and the bulls aren't able to take the price higher. So there could be significant amount of weakness. How much more? Well, the 55-week exponential moving average could be one parameter. It's placed at around the mark of 1700. So about 100 rupees fall is what we expect when it comes to HUL.
How well has this worked in the past?
So only when it comes to the stochastics, Devina, 2 out of the last 3 times that the indicator has generated an early sell signal. On an average over the next 1 month period, the stock has managed to drop close to 6%. If you look on the fundamental side of things as well, the 12-month consensus target price on HUL2 stands at somewhere around the mark of its resistance, which is 1575 or thereabouts. So not a whole lot of upside seen when it comes to HUL.
All right. Thanks very much for that, Yash. A quick word on HUL, Brijesh?
I would definitely agree with yes. So if you look at even if you look at the volumes, we have seen some distribution happening around 1820 marks for in the last whole week, and stock is unable to surpass its previous highs. And as he has clearly pointed, stochastic generally gives the early signals in all FMCG space. If you look at even if the Dabur, even if the ITC, generally this gives the good momentum on the FMCG space. Though they are a slow mover, but it generally take times to come to their targets. But I agree with Yash that it has been slightly on a weak charts, and a good risk reward bet, keeping a stop loss of 1850-55 and a target of around 1720 on the downside can be expected.
You know, somebody made an interesting point the other day at a conference that people tend to compare the discount that ITC trades versus an HUL. But if you look at the kind of premium that HUL trades versus Unilever globally, or if you look at the kind of premium that ITC trades versus cigarette companies globally, you would get the picture. ITC is not necessarily a very undervalued stock. So it'll be interesting to see, Devina, what happens going ahead into these names, whether or not people find value in ITC versus the HUL. But the earnings growth trajectory for the last few years seem to suggest that HUL probably in a better space than ITC right now when you compare those two, because people tend to typically compare the two names and then try and make a call.
ITC, you know, generally is a sloth. In
is.
terms of returns, it just doesn't really move the needle too much in terms of investor returns as compared to an HUL. Even in the recent past, we've seen an example of that. But Avinash, what is your take between the two?
No, I think, you know, in terms of returns, ITC has disappointed shareholders for a long time. And I think, you know, recent numbers from Godfrey Phillips clearly indicate that in terms of outperformance, ITC has definitely lagged behind. And I think, you know, with a volume growth of just 2 to 3% in the previous quarter, I think markets would definitely be looking at some sort of a stronger volume growth in terms of the main cigarette business. So I think unless volume growth doesn't kick in, I would not be surprised that you could see ITC possibly remaining where it is. I won't be surprised that any big re-rating to happen, at least in the near term.
Okay. Are you going out and buying any of these auto ancillary names? You have been bullish in the past, and it's not just you. I mean, a lot of people have gotten caught on the wrong side, Avinash, so nothing bad about it. But the question is, do you believe any of those names present value for now, or would you leave them alone?
No, I think, Neeraj, auto component space is going to be definitely under a lot of pressure in Q2. And our sense is that, you know, there's no hurry in going and buying out these companies. Although there are some noticeable names like Motherson Sumi, Bharat Forge, Bosch. I would believe that, you know, I think most of these companies definitely would see a marked slowdown in both their top line as well as profitability, because operating leverage on the reverse side also impacts them quite negatively. And definitely, I think Q2 is not going to be a great you know, season. So all said and done, I think we could see lower levels. So I think it's better to wait and watch rather than, you know, buying these stocks now. We could probably see a further correction from these levels.
Apollo Hospitals, for one, we spoke to the management on Friday, and they spoke about how the business is shaping up well across, even in the mature hospitals, even the hospitals which are yet to break even, but they're moving in the right direction. What would you do? The stock was up 8% on Friday's session, but just give us an idea of what you do.
I think numbers, Devina, have been quite good. In fact, the markets were pleasantly you know, very surprised on the kind of traction we saw in the profitability, because this is a very asset heavy business, a very low return on capital employed kind of business. But typically, I think what the management said was on the pledging factor and on the pharmacy business. I think that is where possibly markets could be looking at some sort of value locking in the near term. But I think given the kind of you know, positioning this company has in the hospital space, I think it's best positioned. And I think you know, one could definitely look at buying the stock on declines. I think the stock reacted quite positively post the numbers and went up by 8-10%. So I think any correction should be used as an opportunity. This could be a good portfolio choice, provided, you know, you have a long-term view.
Godfrey Phillips, we were talking about that. Brijesh, 16% on Friday's session at 994 now, and I think the day prior to that also it's showed decent returns. What would you do now?
We have seen a good comeback with this stock, and after nearly a long time, I think it was in May when stock was about 200 days average, and after a good sharp rally last week, stock has managed to close about 200 days average. So I think this rally might extend towards 1104, 1120 levels upside momentum, which is around 78.6% of the recent fall from around 1200 to nearly 700 levels. So every dip to around 930, 940 could be a good long bet considering the risk reward wise, and one can keep a stop loss of 890 below the 200 days average and look for 1120 on the upside.
You know, good stock which corrected in Friday's trade was RT Industries. You've been talking about how specialty chemical companies have done well. Avinash talking about Vinati Organics. Look at what RT did in Friday's trade. 1 month performance down about 5%, yes. In Friday's session saw a big cut, about 8% off. And now the RT Industries is a pure play specialty chemical business. The other businesses have been hived off. So this at 1591, what you're buying is the pure play specialty chemicals business. has been a very stable performer, Avinash. Of late, there have been a few other developments as well, including the hiving of the business at 1591. Does it give you value at the kind of growth that it delivers, or would you believe there are better specialty chemical opportunities?
No, I think post the demerger of the bulk commodity business, I think definitely one could see better numbers coming in, because obviously EBITDA margins, as the management hinted, are much better on the specialty side, and I think you could possibly see a stronger traction happening in FY20, considering that now this is a pure specialty play. I would believe that the markets were clearly worried on the capex funding structure, but I think looking at the kind of cash flow generation this company makes and the operating profitability, I think clearly from a longer term perspective, Neeraj, this is also another good specialty chemical player. I would believe that somebody who's looking at a long term positioning for a specialty chemical portfolio should definitely buy this.
Okay. We've got about a minute and a half left to go for market pre-open. And I just want a quick word on Axis Bank. Ruchit, what would you do with this one? I know we've just spoken about IndusInd Bank, but even this one off late has come on the buy list of quite a few technical experts.
Yeah, I think primarily because if you see technically, then there's a harmonic pattern formation in this stock in the range of 640 to 650. And after consolidating of about 3 to 4 trading sessions, we have seen a positive crossover in the RSI from the oversold zone. So, such scenarios usually lead to a pullback move, and we could see the stock bouncing towards its recent gap area, which was around 690, 695. So just from a trading perspective, one can expect a bounce back towards 695. At current levels, one can create fresh longs with stop loss below 650 for target of 695, but not expecting any significant upside from here on unless we see another high top high bottom structure. So one should take this just as a pullback move within a short term downtrend.
Okay, got that. Axis Bank, that's at 675. 30 seconds left to go for market pre-open. Just a quick glance to see if there's anything changed in the landscape of what Asia is doing. You've got 0.5% higher on the Nikkei 225, so not much of a change. In fact, it's, I think, bettered. Hang Seng is up about 1.9% now. With the SGX Nifty, we're trading higher by about 16 odd points. So marginal improvement from the last time we took a check. But it's going to be interesting to see what happens in today's trade and how most of the stocks react, particularly with regards to some interest that came back into the auto pocket, whether that sustains banking as a space. That's the pre-open of the Nifty 50, marginally in the green, 11,066. Sensex is up about 0.5%. Tech Mahindra moves up, that's up about 3% Grasim is up about 2.5%. Gale, 2%. ONGC, 1.5% higher. Ultratech Cement, Tata Steel. Remember, metal as a pocket was really active in Friday's session. Then you've got Z, which is up about 0.5% as well, and the Bajaj Twins are doing okay for themselves. Losers, not too many. Hindalco is down about 1%. IndusInd Bank, Infosys, and Z, which are trading under. Currency, you've seen that weakening a bit, but just a few, I think 2 paise depreciation, at least from the close on Friday, so 71.16 is where it's at. So it's actually come back to those levels, so absolutely flat. But I think Ujjivan and Equitas are in focus.
Yeah, let's pull them up. Those are the top two to monitor, Ujjivan in particular. And we'll have let's see if this stops here. I doubt it will, but let's wait and watch. Equitas Holdings, don't quite know if it'll get a collateral damage impact or no, but let's wait and watch. There might well be a point there. But Ujjivan Small Finance Bank, as the news is out, has filed the prospectus with SEBI for an initial public offer. Remember, the lender is nearing the deadline to list separately as mandated by the Reserve Bank of India. Let's get in the Managing Director, Mr. Itra Davis, who joins us right now on the phone line to talk about all of this and more. We'll get to the implications in a bit, Mr. Davis, but can you give us some details? The numbers that we have right now is that you're going to file for the IPO. Any timelines, any valuation parameters, because the street is still not clear about what kind of valuations would the new listing have?
Good morning. It's good to be with Bloomberg. First and foremost, let me clarify. Itra Davis, who's speaking to you, is the Managing Director of the holding company Ujjivan Financial Services Limited, which is already listed. The bank is the one which has filed the DRHP. And in terms of meeting the conditions, licensing conditions which the RBI has stipulated, we have to be listed by January 30th, 2020. We have examined several options. We have looked at several, ways in which we can get listed in the last 6 to 8 months, almost a year, we have been looking at this, talking to RBI, talking to advisors, etc. And we believe that one of the ways in which this can be achieved is the IPO, because for both the boards of the bank as well as the holding company, this deadline of January 31st is very important, because we are on a journey. The bank is on a journey. It is, we will hopefully become a universal bank and, have all those sort of things in the years ahead. So when those things come up, meeting the regulatory requirements as and when required is very important. And that is why the January 31st deadline is very important.
Mr. Davis, is this a done deal, or is there a possibility of the RBI coming in and clarifying on certain counts that could change the approach that you've taken?
We are hopeful that there may be something in the SFB guidelines, which now that the RBI is putting SFB licensing on tap, they are reviewing the guidelines, and we are expecting those to be announced this month or early next month. So when those come out, if there is anything which goes to address the issue of listing, then we will look at it. But based on the last communication that we had from the RBI, they have said that the listing condition is important. It's something that we have to adhere to. So that is why we have looked at various options. Now, obviously, one of our other SFBs has filed for a scheme. Now, if, of course, that scheme is approved, then it allows us to look at another option and look at that way of doing the listing. But at the moment, in terms of meeting the January 31st deadline, this looks like the most practical approach.
Okay, just to go back to that point, so while the RBI is reviewing the incorporation licensing conditions for small finance banks, what is the probability of something like this going through? You spoke about one of your competitors and a scheme of arrangement out there. There are talks in the market that you probably do not have that much in terms of free reserves to go through with it, even if the RBI allows it.
Well, the reserves have been building up, so the formula which we can apply could be different to what, our competitor is doing. But, it can be done. It's not that once we apply for a scheme, then, within the scheme, we can put together different ways of addressing that issue. So in the last 2 years, our profits have been good. The bank's profits have been good, and the reserves have built up. Perhaps not to the degree that, the other bank has got, but it's a reasonable level as of now.
Because I remember last October having a conversation with Mr. Samit Ghosh, and he said that they're looking at giving 60% of the bank share to existing shareholders. But, that is obviously if there's some changes. But keeping it with the IPO, what kind of dilution are you looking at?
Well, SEBI requires that the minimum dilution has to be 10%. So we will meet that condition. So it also has to be linked to what we can use the capital for that we are raising. And the bank has looked at their requirements for the next 2 to 3 years. And whatever we raise from the market will be available to address that requirement of capital. So we don't want too much capital to be kept in the bank, because then that has to be addressed and serviced. We just need the right amount to see us through for the next 2 to 3 years.
Mr. Davis, this 12 billion of capital via the IPO, does it, with an assumption that this is how it all goes through, does it open the door to a second round of dilution, because then you would have free reserves similar to that of some of the others, or adequate free reserves, let me put it that way, to bring down the promoter holding? And is that long-term game plan probably moving towards that, with an assumption, of course, that the IPO goes ahead right now?
There's one issue that I have to just mention, because now that we have filed at the RHP, there are some requirements that we have to meet, and I cannot speculate that far ahead as to what the circumstances are. But, the idea is that as a bank and as an institution, we have always taken and focused on the interests, the long-term interests of our shareholders. So even, if you look at the succession plan which Mr. Ghosh has put in place, Mr. Chugh joined us on Saturday, and he is now part of the bank. So all of those are well thought out plans, and it is a management and a board which addresses the issues and concerns of shareholders. However, banking is a long-term perspective. We cannot give short-term solutions. If somebody is looking at, being with us for the long term, they are in the right place.
No, indeed, Mr. Davis, and I'm sure nobody has any doubts about that. It's just that this technicality brings about the holding company discount, as you would be well aware of, and the markets are trying to grapple with that as to what happens immediately and what happens over the medium term, and which is why my question. I mean, it was not with regards to the kind of processes that you put in place, but more about the technicality.
Yeah, that, you're right. I mean, the market, and there are other examples of holdco operating company sort of thing. Now, that is the structure we have. Obviously, the holding company has only one operating subsidiary and nothing else. So it is that closely linked. Now, the operations of the bank have been doing extremely well. And 2 weeks ago, we announced the first quarter results. And we are also holding firm to the full year forecast that we gave at the end of May. So having said all of that, the market has to make up the mind, as to what is the discount that they are looking at. Now, it is true that the holding company is one step removed from the operating company, but that step is a very small step. It's not that there are several other subsidiaries. So it's a call which the market has to make. And, the market addresses those issues in times to come. And they have to also see what is ahead. It's not just the discount. There are things which will evolve. And they have to look at that and take a judgment call on those things.
All right, Mr. Davis, it was a pleasure chatting with you. Thanks for coming on board and sharing your thoughts with us with regards to the latest filing of Ujjivan Small Finance Bank.
Thank you. Thanks very much.
All right, back to the markets then. And clearly, obviously, the management believes that there is long-term value in sticking.
Yeah, they would, but the technicalities, and this 10% downtick in the pre-open may not be the end of it. We might actually see some further reactions going
But interestingly,
ahead.
it's not the final. If the RBI comes out and gives a little bit of a leeway, then they might actually change their approach.
Yeah, so let's wait and watch what during the course of the day the street believes would the holdco discount that they would give right now based on the information at hand, and then maybe change. But as Avinash Gorakshakar already said earlier, that he would not go out and venture into buying into Ujjivan or Equitas right now, for that matter. There are probably other options available. So let's look at those and don't quite venture out onto those names. So keep that at the back of your mind. It's Brijesh, excuse me, it's a difficult one to maybe trade, but if I can still just ask you, purely looking at the charts, not looking at the fundamentals, Ujjivan Financial, what do the charts suggest? It's likely to start off 8 or 9% lower today.
I think still more downside is left if I just looking at the chart when you were discussing. So if I just look at the monthly chart, it has been, if you look at the June month, we have seen a good strong selling followed by with the July, and even if in the August we are unable to surpass the July highs. So I think test towards 200 to 190 could be on cards, and stock might see a good strong bottom. So if I just look at even the RSI on the monthly, it has been forming around those levels. Weekly RSI is slightly on the downside, but when weekly RSI tends to move out 30-35 zone, stocks tends to give a good return of nearly 40-45%. So with the today's fall of around 10 or 12 odd percent, RSI might see a good sharp downside. So at around 200 levels, I think stock might take a halt, and that could be a good buying opportunity around 200 levels.
Okay, let's wait and watch if that happens. Minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, State Bank of India Chairman Rajneesh Kumar calls attention to the subdued credit demand in the country, echoing the clamour for an economic stimulus.
Ujjivan Financial Services has filed a draft red herring prospectus for the listing of its wholly owned small finance bank. Ujjivan Small Finance Bank plans to raise about 1,200 crores through this IPO.
CLSA maintains buy on Maruti Suzuki but cuts the target to 7,200 from 7,400 rupees per share earlier. The brokerage says demand remains weak. However, Maruti is the best play in case of a recovery in the Indian auto industry.
Godfrey Enterprises' debt falls to 1,000 crore rupees after the sale of its Bengaluru Tech Park.
Anti-Corruption Bureau registers a fresh fraud case against Jain bank's officials for loans worth over 350 crore rupees.
DHFL says the company is not in a position to release quarterly results in time owing to engagement of accounts and finance teams in various non-routine audits.
Well, interestingly, DHFL is reacting mildly positively to that, and Cafe Coffee Day, remember, it's a conditional thing that they've said that if indeed these things happen, then their debt might fall to these levels and therefore manageable and all of that. But the stock is certainly active in the session today. After a number of days of a downtick, Cafe Coffee Day. I think the chart would be interesting, the 1 month chart, if we can pull up for Cafe Coffee Day enterprises. After a number of days of coming off, it's the first time in probably, I don't know how many days, that we're seeing an uptick on Coffee Day stock. Let's wait and watch if this lasts or not. J&K Bank is the other one which is taking a bit of a downtick, but otherwise it seems to be a start which is very dull. There are not too many stocks which are moving around. Titan is doing okay, 1104, 2.5% higher in trade. We're going to be talking about consumption very shortly on the show. Avinash, Gorakshakar, from amongst the consumer names, Titan Company, 1104, straight play on gold jewelry consumption. Forget the other consumer variables that it has. Is it a good stock to own?
Yeah, I think, Neeraj, if you look at the business model, clearly, I think over the next 1 or 2 years, I think consumption is not going to stop. And despite the challenging headwinds, the company posted a reasonably good quarter. Our sense is that, the next 1 or 2 quarters could be challenging. But if you look at it from a longer term perspective, the kind of franchise and the kind of branding Titan has created, I think, the best part is they have significant amount of pricing power. And I think clearly any dip should be used as an opportunity to accumulate it, because we could possibly not find many such examples of consumer franchise being created at this level. So I think growth is definitely going to happen over the next 2 to 3 years, but in the near term there could be some challenges.
Okay, that is a quick take on Titan, which is at 1104. A minute left to go for market opening. Just getting those quick top calls from both our technical experts. Start off with you, Brijesh, first. What would you be focusing on?
I would stay with the Bandhan Bank long bet around 1. I would stay long on Bandhan Bank for the target of 524 to 540 on the upside, keeping a stop loss of 492.
That's Bandhan Bank at 505. Staying long on that one. Ruchit, what about you?
One of the recent outperformers, Pidilite Industries, we have seen the high top, high bottom structure getting continued. One of the very few names which is trading at its 52-week high. Even at current levels, I recommend to go long from a trading perspective with stop below 1330 for target around 1420.
Jamin, stay on actually. Brijesh, just very quickly, 20 seconds. The Nifty Bank likely to start off around 0.4% higher. Would you trade it on the long side?
Yeah, definitely for the target of 28,500, keeping a stop loss of last Friday's close of the momentum side.
Okay, so a stop about 100 points lower, a target about 28,500 for the Nifty Bank for Brijesh. Gentlemen, stay on. We'll just take in opening thoughts from all of you before we let you go. But here's how the markets are starting off positively, I might add, nearly 0.5% or thereabouts. Let's see if we indeed eclipse that. So, okay, not quite 0.5%, slightly more than 1/3%, less than 0.5%. The Bank Nifty, though, nearly about 0.5%. So it's a good start, taking cues, of course, from the rest of the Asian pack and what the US markets did in Friday's trade. The mid cap and the small cap indices should also come up on your screen. Let's see how they're starting off, about 1/3% higher for both the mid cap and the small cap indices. So not a bad start for both of these either. The breadth seems to be positive for now. Let's wait and watch. Get the heat map up on the screen. A lot of green, very little red, hardly any losers. Let me talk about the gainers first. Indiabulls Housing Finance and Sun Pharma are the top two gainers, about 1.5% or 1.7% apiece for both. Indiabulls Housing Finance now quickly up 2.5%. Titan about 1.5%. UPL, the best performer in Friday's trade, is up about 1.27%. There is some strength in Bajaj Finserv, about 1% higher. JSW Steel, Eicher Motors, Axis Bank are all up about 1% apiece, and there is strength in Adani Ports as well as Bharti Infra, about 1% higher. So, well, not bad. Reliance Industries about 0.5% higher. HDFC Bank about 1/3%. Only 4 stocks in the red. Power Grid is the top loser, down about 1%. Z marginally down about 0.5%. Asian Paints hardly any losses. M&M hardly any losses, but more green than red. And the Nifty and the Sensex now up about 0.5% apiece. So good going really. Very quickly to the stocks that matter. I think the stocks which are in focus today. Start off with Ujjivan. Can't not talk about that first up really. And let's see whether it's having a loss less than, wow. It's not really corrected as much, just about 4%. I don't know if the markets are taking this very, very kindly. The possibilities to the answer that he gave to Devina, that if indeed the rules change, then they might have an option, etc., etc. But just about a 3% cut, much in stark contrast to what almost everybody is predicted. Let's wait and watch. Avinash Gorakshakar is right. Let's wait and watch if this lasts, though. 4% for now. Equitas, and let's see if that is doing anything. The RBI deadline nears for Equitas, about 1/3%, nothing too dramatic. And stocks which were, well, in action in Friday's session. All of them trading near 52-week highs. Let's see what they're doing today. So Trent corrects marginally after having a very good run. I think it's a buy call from Ruchit, if I'm not wrong. Dr. Lal, Path Labs about 1.5% higher. Avas about 0.25%. So, well, not a bad start. I must say, Devina, Ujjivan has surprised most people.
At least it's a contrast to its pre-open price as well. But anyways, the rest of the day is left to watch out and see how this stock trends itself. 272 as of now. Other stocks in focus, and you've got Jet Airways down, lower circuit, I think 5% under. Cox and King is down, another 5% and you've got J&K Bank, some chatter about a fraud there, so that's down about 2.5%. SL Propax down 1.5%. 1% beverages. Equitas is lower. Future Consumer, Godrej Consumer, both of them a slight marginal dip in today's session, but nothing much in terms of the big losers. Godfrey Phillips is again up about 7.5%. So this one's really having a sweet run in the last 3 trading sessions at least. 53% in the last 7 days of trade. I think bulk of it came in the last 3 days. Coffee Day up about 5%. Lakshmi Vilas Bank, some semblance back into the stock, so that's one's up about 5%. Spark is up about 4.5%. Interglobe Aviation 3%. Divan Housing Finance, even though they've clarified that they cannot really meet deadlines in terms of reporting numbers, stocks up in the session. You've got Indiabulls Ventures. Tamil Nadu Newsprint is the other one that is very active, and the last 7 days has been up 20%. The likes of an HCL Info, then you've got a JSPL, which is up about 2% Century Plyboards, a few other names, a DCB Bank, which is doing okay, and IDFC First Bank also is doing fine for itself.
Well, interesting start to the trading day. Let's wait and watch if this lasts. The Nifty Bank is up 173 points, so it's a very brisk start to the large caps. Hardly any losers, more stocks gaining. Quick opening thoughts. Ruchit, to you first. The thought on the index, the way it started, and anything that stands out for you?
So we have a gap up opening in both Nifty as well as Bank Nifty. So first half an hour would be very crucial. If we manage to sustain above this gap, then we could see this pullback in intraday getting carried towards its 20 EMA, which is around 11,150 to 11,180 on Nifty spot. So in case if this gap sustains for first half an hour, so one can look to create fresh longs only from an intraday perspective for target projections of around 11,150 to 180.
Brijesh, what about you?
Yeah, I would already suggested the Bank Nifty, but still at 11,105, I would suggest to go long on Nifty for the target of 11,185, keeping a stop loss of 11,054 on the downside.
Avinash, what do we do with the Lakshmi Vilas Bank? Obviously, now with the Indiabulls deal, I mean, the stock is also extremely volatile in the kind of moves it makes.
No, I think, the movement of the stock clearly would depend on the kind of judgment which comes from RBI. I think we are yet to get the final nod from RBI as far as the merger with Indiabulls Housing Finance is concerned. But I think operationally, the Q1, Devina, has not been a good quarter. We have seen, both the income as well as operating profitability taking a big hit. So I think, from a fundamental perspective, it's difficult to gauge how this bank would do in the near term. But obviously, the merger is now going to be the big event. So I think it's better to wait and watch. I think this is definitely going to move in tandem with how the decision for the merger happens. If it doesn't happen, I think you could possibly see a deep correction.
Sun Pharma is the other one. I think there is some bit of news that Sun Pharma and China Medical System Holdings, they entered into a licensing agreement for generic products for the sale of them in mainland China. The stock's at 421 numbers, post numbers. In and out, you've seen peaks and troughs for this stock, post numbers as well. But on the charts, Brijesh, Sun Pharma at 421.
I think I would look to go short around 424, 426 levels. If you look at just the daily chart, the stock has been not able to manage to cross its 200-day average since November 2018. And even post-result, when we have seen stock moving 440, 441 levels, stock was unable to surpass its average, which was around 449 at that point of time. So I think a weak weak chart and possible 385 is the downside I'm looking at. So around 425, go short, keeping a stop loss of 442 for the target of 385, 380 on the downside.
Okay. Jet Airways starts off about 5% lower, so any kind of gains last week are short-lived, so keep that at the back of your mind. Minda Corp has some downticks. Aarti corrects another 3%. Something's wrong there. 8% down on Friday, 2% down today. Let's wait and watch what happens there. What is doing well is Godfrey Phillips, 5.5%. Brigade, about 6.5%. Prestige Estates, about 5%. Well, real estate seems to be doing okay. Is there a stimulus coming for that sector? I don't know. HDL is up about 3% as well. Not bad going there. Avinash, are you looking at real estate stocks at all?
No, I think Neeraj, clearly real estate, I would believe that the larger players would be well positioned, where balance sheets are fairly less leveraged, and I think in this category, something like a Mahindra Lifespace or an Oberoi Realty clearly have a better degree of visibility. I think Soba also posted a decent set of numbers, so I would believe that it's better to put your focus on a few selected stocks where leverage is less. You're right that possibly we could see some fiscal stimulus coming in here, but to expect these stocks to move up significantly purely on fiscal stimulus would be a little too much to expect. So I think clearly Soba or Oberoi Realty on declines could be considered.
Well, let's wait and watch. But the pack is active today. Brijesh, any thoughts here? All the real estate names. I think you had a call on DLF, if I'm not wrong, and which is I'm coming to you. Would you still go with the DLF, or any of the other charts also look good?
I think apart from DLF, Godrej Properties look very good on the charts. The stock is managing to hold 898, 900 levels for quite some time, and at around 919 today, one can look for a long bet. I think 4-digit can be expected soon on this stock. Stock has broken its short-term falling trend line, so keeping a stop loss of around 885 on the downside, and upside I'm looking at 1000 plus on the Godrej Properties.
All right, gentlemen, we'll leave it at that. Brijesh, Ruchit and Avinash, thank you so very much for joining us this morning with your thoughts. Going on to some earnings, then IGL has posted double-digit volume growth for the 10th consecutive quarter. However, the natural gas player underperformed in terms of margins compared to peers, Mahanagar Gas and Gujarat Gas. To know more about the quarter gone by, Soumya Sarkar had a chat with the managing director of the company. Listen in.
The volumes have grown by double digit, mainly driven by, it is uniform over all sectors, CNG and PNG, domestic and industrial commercial. We have been maintaining that we will be growing at a rate more than 10% for the whole year also.
Okay. Your unit margins now, that is EBITDA per SCM, that has also increased in the first quarter. What would you attribute this to? Is it completely because of the price hike?
Yeah, we took a price hike in April, so this actually factored in all the costs. So what happens is in between, if the dollar fluctuates or if the minimum wages are, increased out of turn, then it affects our EBITDA. Otherwise, this is the EBITDA we are targeting.
So was price hike the only reason why your EBITDA per SCM increased in the first quarter of FY20?
No, we have factored in all the cost factors, whatever is we have the minimum wages is one factor, then the other factors like, that dollar, the exchange rate, these are the ones which basically, affect our cost.
Okay. So what has been the impact of implementation of Ind AS 116 on your EBITDA?
The impact has been in the AS, if we put on EBITDA, it is around 8 paise. From 6.3, it will come down to 6.22.
Okay. So your EBITDA per SCM would have been lower by 8 paise if Ind AS.
8 paise, yeah.
Okay.
And the PAT has decreased by PAT is same.
Okay. So for the second quarter, have you taken any price hike or cut so far, and how have your margins held up so far in the second quarter?
No, we have not taken a price hike in the second quarter.
Any price cut that you have taken?
Yeah, we have taken in July. We have taken July 90 paise. That is basically
gas transportation
to offset the the transmission charges increase of GAIL by PNGRB.
Okay. Okay. And what are your capital expenditure plans for the financial year 2020? Also, if you could give us a breakup on how much you're going to spend on the existing areas and how much you're going to spend on the new areas.
CapEx, we are doing around 50 to 100 crore in the new areas like Kanpur, Ajmer and Kaithal. And in the existing areas, we will be putting at least 600 crores. Total, we are expected to put in a capex of 1100 crore for the financial year.
Okay. And if you could share some details on what is the current status of the various geographical areas that are currently under development?
Yeah, we have started our CNG station in Karnal, Muzaffarnagar, and we have also started sales in Gurugram, the part of Gurugram that we have. And we will start at least 2 stations in Kanpur, Fatehpur as well as Ajmer, Pali before the end of this financial year.
Okay. And what is the status of addition of DTC buses? Any updates on the same?
They have floated a tender for 1,000 CNG buses.
And
it has not yet been finalized.
Okay, it has not yet been finalized, that's what you're saying?
Yeah.
Okay. And how has been the private car conversion and what would support your volume growth going forward?
Yeah, the private car conversion is constant at around 4,500 a month. And going forward also we expect to keep up the same, and moreover all the manufacturers of cars, they have also come up with CNG variants. So that will increase the number of new cars being added on CNG every month.
Okay. Now, as you're expanding in new areas, your volume growth would be back-ended. What is the kind of margin or return contraction that can happen for the company?
Yeah, the first 3 years, has been there will be heavy capex. So, but we don't expect that it will impact our profitability a bit. Maybe we will not get that much return for the capital employed immediately, but in the long run, we will keep up the profitability in today's level.
Okay. Lastly, sir, do you see the implementation of BS6 and government's push for e-vehicles to have any impact on your volume offtake going forward?
Not immediately. EVs are not on the horizon for another 2-3 years. And BS6 also will not impact us negatively. If at all it may impact us positively only because of the, the high cost of diesel vehicles and diesel fuel as such.